Hey everyone, today we'll be talking about taxable persons in the corporate tax regime as per the new public consultation document that have been released by the Ministry of Finance. Before we move ahead, please click on the subscribe button and the bell icon to stay updated on our future weekly business and finance related content, which is incredibly useful for business owners, CEOs, CFOs, entrepreneurs and those who aspire to be one. Now let's get back to the video. Now let's discuss the taxable persons, who the natural persons and legal persons are, and who is exempt from the corporate tax regime. So, who is a natural person and do they have to comply with the corporate tax regime? When we're talking about natural persons, we're talking about individuals like you and me. There will be no income tax on income earned from employment income and other personal income, which includes the following: dividends, rental receipts from UAE real estate, other investment income, and other investments that are held through private or family trusts where the beneficiary is a natural person. If a natural person conducts business or other commercial activity without incorporating an entity in the UAE, they may still attract corporate taxes. In general, if a natural person was supposed to create a commercial entity in the mainland or free zone or other permits that are equivalent to the same to conduct an activity in the UAE, then the corporate tax regime is applicable to them. What is the tax treatment for a legal person in the UAE? In general, if the legal person has a permanent establishment in the UAE or UAE sourced income, then the legal person has to follow the corporate tax regime in the UAE. As per the public consultation document that have been released by the Ministry of Finance, we can say that the following entities will be treated as a legal person: limited liability companies, private shareholding companies, public joint stock companies, other entities established under the UAE laws, limited liability partnerships, partnerships limited by shares, and other types of partnerships. Limited and general partnerships and other unincorporated entities could be treated as transparent in the corporate tax regime. What this means is that the entity itself will not be taxed, however, the members would be taxed on a follow-through basis. It may become a little more challenging when we are talking about cross-border transactions, where the foreign jurisdiction does not use the same transparent concept, and they prefer to treat it as a company by itself. In such a case, to avoid confusion, what the corporate tax regime in the UAE is going to do is to say to follow the same treatment as it's going to be used in the foreign jurisdiction. Now let's get into who is exempt from corporate taxation in the UAE. As per the consultation documents, we can see that the following entities will be exempt from corporate taxation. Firstly, the federal and emirate governments and their departments, authorities, and public institutions. Number 2, wholly government-owned UAE companies that carry out sovereign or mandated activity and are listed in the Cabinet Decision. 3. Businesses engaged in extraction and exploitation of UAE natural resources that are subject to emirate level taxation. Number 4. Charities and other public benefit organizations that are listed in the Cabinet Decision. Number 5. Public and regulated social security and retirement pension funds. And finally, investment funds. However, for investment funds, they do have to meet specific conditions to be exempt from corporate taxation. What are some of the main conditions that an investment fund has to maintain in order to be exempt from corporate taxation? The first condition is that the investment fund must be regulated by a regulatory authority in the UAE that is recognized by the Ministry of Finance. For example, the Securities and Commodities Authority, the FSRA, and the DFSA. Number 2, no group of 5 investors or their related parties should own more than 50% of the investment fund. Number 3, no single investor or their related parties should own more than 20% of the investment fund. And finally, the interests in the investment fund can be freely traded in the stock exchange in the UAE or any other recognized foreign stock exchange, or a widely marketed and made available investment that is intended for the categories of investors. Now that we've understood how natural persons and legal persons are treated in the corporate tax regime and also who are exempt from corporate taxation, let's discuss in detail in the next video about free zone entities and how free zone companies are treated in the new corporate tax regime. We've now reached the end of our discussion. If you like the video, hit the like button and subscribe to our channel. If you want us to talk about any specific topics, please do let us know in the comment section below. See you in the next one.